Hello and welcome. You're watching Your Trades on ET now. I'm Anisha Jain. It was a wobbly week for the Indian markets. A lot of news flow really to track. But the coming week is going to be very interesting as well because we have the monthly options expiry. We'll get the minutes data from the Fed as well. Plus the fag end of the earnings season is something that we need to watch out for when it comes to the Indian markets. But let's talk about the week gone by. Well, the Nifty managed to scale the level of 18,000 intra-week, though by the end of it, we managed to end in a bit of a red on Friday. For the week, however, the Nifty managed to eke out minor gains, and this is the third consecutive week that we have seen an uptrend coming into the markets as well. The Fed rate hike concerns really gripped the market because globally, if you see, there was a bit of pressure, a risk-off sentiment. The US 10-year yield is also very close to the 4% mark, so that is something which has been pressurizing global markets as well. Recovery was seen in IT stocks, so IT was one of the top performing sectors this week. You also had Adani group of stocks that continued to remain in focus, and lastly, it was results which will be expected from Mahindra CIE and Sanofi in the coming week. So we'll watch out for some of these factors as well. But let's talk about the markets this week as a whole, and it was the banking index really that was underperforming. The small cap index and mid cap index too have managed to snap the gaining streak and ended the week with a bit of a cut. But the real pressure point this time around, this week around, was a bank, and that was led by the PSU banking names because they were reeling under quite a bit of pressure. Even autos were in the reverse gear this week, so not much action happening there. And even pharma, realty, media, these were the other pain points for the markets. From the IT sector, let's pull up the intraday chart or rather the week chart of Tech Mahindra. That one was up a good 11%. You also saw a solid move come into UPL this week with a gain of almost 5 to 6%. Reliance, that heavyweight, also showed quite a bit of traction this week with a gain of almost 4%. On the losing side, however, you of course had Adani Enterprises, which was coming under pressure, plus SBI, IndusInd Bank, HDFC Life, and SBI Life were some of the other drags as far as the markets this week is concerned. But what about the coming week? Let's discuss that with Mr. Rajesh Palviya. He's joining in to talk to us about the technicals of the market from Axis Securities. Rajesh, hi, thank you so much for joining us. And we also have Mr. Ajay Bagga joining in to talk to us about the fundamentals of the market. Rajesh, first, let me come to you. 18,000 is something that we scaled in the week gone by, and we all got excited that maybe 18,250 is coming. But all the hopes got dashed on Friday.
Yeah, good afternoon. So yes, we have seen that market crossed 18,000, but not able to hold those level. And in today's session, especially, we have witnessed supply pressure across the board. The banking was the major trigger for today's fall, and Bank Nifty is now turned one notch negative. Compared to Nifty, but still Nifty is holding the ground, like 17,850, 17,870 is the important support area for the Nifty. And if Nifty at all manage to hold this level, then possibly some support buying action we can see from some other stocks which can give some support buying at this in this corrective move. So for next week, 17,850 is the key level to watch for. If we hold that level, then possibly Nifty will try to find some support buying around those level, and possibly in pullback again 18,000, 18,050 are the key hurdle for the Nifty in any kind of pullback action. Only the fresh buying or major short covering we can see only above 18,050 level. If we crosses those level, then we can expect some short covering action which can take Nifty higher further towards 18,200 also. But as of now, the we expect that market is likely to remain in the range only. For Bank Nifty has given a breakdown. So 41,400, 500 was the important level for the Bank Nifty, but in today's corrective move, Bank Nifty has given breakdown, and put writers have shifted their position lower to 40,500, even 40,600 strike. So, which is the next major support area for Bank Nifty in this corrective move. So, if Bank Nifty continues to remain below 41,400 level, then possibly we can see further more pressure in the coming week towards 40,500, which would be the next possible target on the Bank Nifty on the lower side. Only the short covering can be triggered only above 41,500. If we not able to cross those levels, then Bank Nifty may remain under pressure for next week also.
So Bank Nifty might remain under pressure going forward as well in the coming week. But let's try and understand what's happening with the market not only in India but globally as well. And Mr. Ajay Bagga is a keen watcher of what's been happening with the central banking action as well. Ajay, I wanted to begin our conversation by asking you just about that because we heard a lot of Fed members this week, 5 to 6 of them, and the consensus seemed to be that there are more rate hikes coming. The terminal rate needs to be higher than what the street is penciling in, and perhaps a 50 basis point hike in the next cycle. Um, are you of the similar view as well? Is that what we're likely to see, and is the market pricing it correctly?
Yeah, no, market was actually pricing in a more Goldilocks kind of a scenario where inflation smoothly trends down, economy stays on a even keel. There is no landing, no hard or soft, no landing at all. The economy keeps flying ahead, and stocks will react in that scenario. So 8% the S&P 500 went up in January based on this Goldilocks kind of a scenario. What has happened subsequently is three, four very major data points. One is the very strong US jobs growth, nearly three times at 500,000 plus jobs coming in. The unemployment numbers coming down to 1959 levels. So nearly a 60-year low for unemployment. Third was the CPI, though declining, but declining less and coming in higher than estimates. The PPI, the Producer Price Index last night, that even came little above estimates. And the fifth major thing was the very strong comeback in the US retail sales, nearly a 3% year on year growth on the US consumer, which is the biggest cohort. If you see out of say 100 trillion global economy, the US consumer is about a 15 trillion strong cohort. And if that is growing so fast, that clearly showed the central bankers that still the economy is not reflecting the 282 rate hikes that all global central bankers did last year, and it might, the bringing inflation down to targets might require more rate hikes and to stay higher
Hmm.
for longer. So smooth economies but confused markets, I would summarize based on that.
Confused markets, definitely. That is what it seems to be happening this time around as well. But Rajesh, your take of where we can see the monthly options expiry happening, and what does the premium for the March expiry tell you? Because that's still healthy at around 100, so a bit more upside rather than downside, right?
Yeah, so premium is there for March expiry, and looking at the overall setup, first half was very dull for Fab series, and second half, yes, we have seen some traction on the buying side. After a consolidation, yes, there was a breakout. So looking at the data setup for this expiry, we are expecting it should be around 18,000 plus minus 50 point for the expiry for this Fab series. And for Bank Nifty, yes, it could be around 40,800 to 40,900 for Bank Nifty. So we are looking at expiry to remain at the same level only where we closed for this week, because as of now the data setup is clearly indicating that call writers for 18,100 strikes are very aggressive, and put writers for 17,800, 17,700 are still intact. So this broader range we can see for this coming week. So we are expecting 18,000 plus minus 50 point for the expiry
Sure.
for this Fab series on Nifty, and 40,800 for Bank Nifty.
Okay, understood. Point taken. This was also the week when we finally brought the earnings season to an end for Q3, right? A very busy week with respect to the earnings as well. Ajay, what were your key takeaways, and did any sector churn emerge out of it? In the sense, does any sector become a buy after this earnings season, or is there any sector which you think one should book profits of? We have seen the peak already.
Uh, Peak, no, but I think banking, financial stayed on top. That was good. I think cement is emerging as a very interesting sector, and with the price hike that you were highlighting earlier in the show during the day, that will help the bottom line a lot. Their input costs have been going down, and I think cement is coming into its own after a very long gap. Industrial is doing very well, and with the infrastructure thrust, the 10 lakh crores being spent on infra, railway capex, defense capex, the overall infrastructure capital expenditure. I think those are very good sectors that can be looked at. One little contrarian or little ahead of the curve call would be metals. We have seen really atrocious numbers. That's one contrarian call, that as China recovers, and we will see the Chinese recovery gaining traction around June is when I'm expecting the factory numbers to start really shooting up. And inventory levels are low in metals, and all of a sudden you will see price action coming back. So I would take some positions in metals in anticipation of a Chinese recovery. The profit numbers were very poor, margins fell down because of pricing going off. I think global pricing will come back to metals, and that will help our metal producers as well.
So metals is one space that Ajay is becoming incrementally more positive on and need to be watchful of what's happening in the cement sector as well. Though financials seem to be the consensus buy as well. Stay on, gentlemen, with us. It's time now to slip into a very short break. But when we come back, we'll talk about the events which are lined up in the coming week and which are the best sectors and stock recommendations coming in from our experts. Welcome back. You're watching Your Trades on ET now. Rajesh, I wanted your take regarding the banking sector. Now, you've talked about the Nifty Bank and where do you see the levels, but if I had to ask you stock-specific recommendations from that particular space, what emerges as the top buy and which are the stocks that you would recommend booking profits in when it comes to the banking space?
So weakness is there in banking space. So from that space, we believe that IndusInd Bank can continue furthermore. Corrective move from the current level also. So we believe that if you are holding IndusInd Bank, you can book profits because looking at the setup, we believe that stock can correct further towards 1050, 1040 level in the continuation of this down move. So this stock is looking bearish. On this space, we believe that Federal Bank is looking attractive at the current level. After this corrective move, stock is now trading near to its important support area of 125, 123, which is important support area for Federal Bank in this corrective move. So, if you want to buy the stock, Federal Bank is available at a very attractive price. So, one can buy Federal Bank in this correction towards 123, 124 level. Keep stop loss of 120 if you are buying at the current level. From large cap space, we feel that further more supply we can expect in ICICI Bank also, because if you look at the overall setup for ICICI Bank, stock is continuously witnessing the supply pressure for any kind of pullback action which we have seen in the recent past. So for ICICI Bank, the major hurdle, major challenging level on the higher side is at around 880, which is a crucial level for ICICI Bank. Till stock not manages to cross those level, possibly stock may take a dip towards 845, which is the important support area. If at all it comes near to 845, it's a opportunity again to buy around those level. So those who are trader, they can go short with stop loss of 880 for downside target of 845, where again the stock will try to find some support buying action around those level.
Okay, so banking, these are the top trades that you can, look at trading at this point of time as well. But Ajay, wanted your take regarding the IT sector because that was clearly outperforming. And after the earnings season, while we haven't seen big upgrades, but the sentiment seems to have turned for the positive. The valuation is something which is providing the comfort as well. Plus, the outlook is not as doomed as the street was expecting. What's your take with respect to IT? Should one look at buying perhaps in any of the large cap or mid cap names?
Large caps, we should look at, more staying power, and we have seen the attrition problem going away. Still, the order flow has been muted, but a few big orders in a couple of companies we saw did move the stocks quite well. So good cash generators. This year will be challenging, but that's more on the hardware side and the product side. I think the IT services should continue to do well, and in the second half of the year we should see a good recovery as the global economies heave a sigh of relief that we are not getting into a deep recession. So that should be positive for our IT service companies. And I would be a buyer. I am holding some positions. I would add to those, with this kind of an outlook on the economic side.
So, an ad coming in when it comes to the IT sector, especially on the large cap names. Rajesh, if I had to ask you top recommendations, what would the stock specific ideas be?
So from my side, we like capital goods space as well as cement space. So from capital goods space, we like L&T. L&T is looking very attractive in this volatile market. Also, this stock is consistently showing buying interest and holding its ground on the higher side. Looking at the overall setup for L&T, we believe that this stock can continue further higher towards 2300, 2350 in the continuation of this up move. So one can buy L&T with stop loss of 2170. Another segment which we like, that is cement space, and from cement space we like Ultratech Cement. If we analyze overall setup for Ultratech Cement, after a strong recovery in recent past, now stock is consolidating at higher band. And on the weekly chart, the stock is now penetrating its multiple resistance zone area on the weekly chart. Overall, stock is trading above its short-term, long-term moving averages. Stock managed to give breakout of on the daily chart of its falling trend line also. So looking at the overall setup for Ultratech, we believe that this stock can scale up further higher towards 7450 in this continuation of this uptrend, and one can buy with stop loss of 7220.
Okay, Rajesh as well as Ajay, thank you so much for joining us and appreciate your time on ET Now today. With time now to get you the word of the wise, and that's coming in from none other than Ramesh Damani. We spoke with him earlier in the week, and he's quite positive when it comes to the PSU names, some of